Many folks keep a close eye on investment markets, wondering about the long-term impact it's having on their wallet. With inflation still a factor, especially for those on a fixed income, building a strong retirement portfolio's never been more important. To break down the strategies, I sat down with Mike Martinez from the Pension Group, a Columbus-based firm that's been helping folks build financial confidence in retirement for more than 30 years.
NBC4 Financially Speaking is sponsored by Mike Martinez with the Pension Group.
Mike, thank you for being with us today. We are seeing mixed signals in the economy right now. Why is inflation a consistent concern, especially for our retirees?
Well, let's face it, seniors, a lot of people are on fixed incomes. I know my parents, my dad's 90, my mom's 87. I know personally. I hear from them all the time. And let's take a look at inflation data. In July, the numbers came in fairly good, 2.7%, so it's showing that inflation's down, but the overall number is actually up because we don't account for energy and food, which are probably the two biggest things we see with inflation. So that number is actually at a 5-month high at 3.1%. So certainly for seniors, we have less purchasing power. They're already on limited budgets already, and just to have a little bit of an increase, certainly to stretch that budget is difficult for a lot of seniors.
There is something you call the silent tax. Tell us about that.
Well, it's really inflation. It does become a silent tax because goods and services are more expensive, and certainly it eats into their purchasing power. So that really is a silent tax, inflation in and of itself.
What are the key strategies for building a portfolio that counters inflation while protecting savings? Well,
I think the biggest thing I stress to a lot of people threefold is you need to be invested in stocks. Long-term stocks will outperform the market. You can be looking at dividend producing stocks to still have growth but produce income. Real estate's going to be another way to outpace inflation. Historically, that's outpaced inflation. And taking a look at bonds like TIPS, there's different ways of providing that type of income. It could be muni bonds that are tax-free. You can get into corporate bonds that are yielding 4.6 to 5% right now for the next 4 or 5 years. There's a lot of different ways that we can get people higher rates of return than what they're getting with CDs or money markets right now.
You also say it's important to be strategic with cash. Explain.
Well, we know as far as cash, cash a few years ago was, easily get 6%. Today, you might get 4 on a money market. We have a client from a major credit union that she saw that coming as far as reduction in rates, and some of those rates are below 3%, 2.5%, 3%. So we were able to transition someone into a scenario where we have fixed income that's giving them higher yields than what the banks are giving. The principal is protected, and that's one of the things as far as retirees. Maybe you don't want to have everything in stocks. Maybe you want to have 30-40% in bonds or a bond equivalent, maybe a fixed annuity that regardless of what happens to the market, like with some of the MIGAs out there, we can get anywhere from 5 to 5.5% for the next 3 to 5 years, no market risk, and still give people that opportunity. Another way I would stress is, there's also annuities today that provide a 23% upfront bonus. So to get that bonus on $500,000, that's $115,000 added day one to someone's contract. If we had $1 million, that's $230,000 day one being added to people's contracts. So there's a lot of different ways of showing seniors how to protect their money without having market risk. And again, you need to take the time to evaluate these options, but timing is really everything, so people need to call now.
And the key is to be proactive, is that right? Yeah,
proactive is one of the terms I use all the time with a lot of people, because a lot of people are they get comfortable with what they have. I've sat down with people that have several $1 million, someone that has $200,000-$300,000 as well. A lot of people get set in their ways. They get comfortable. I work with this bank, or I have CDs here, here, and here, and here. Well, why'd you pick that strategy? What if we consolidate and got you a better rate? Does that make more sense? And for a lot of people, it does. Especially now with the lowering interest rates, with what the Fed is doing, I really stress the importance of now more than ever to really evaluate your options. We certainly offer a complimentary consultation. I know that's one of the things that we're offering to viewers today. But you need to take advantage of that, is really what it comes down to.
All right, and to help folks start taking advantage of that and what you can offer, you have an incentive for our Columbus Living viewers. What is it?
Yeah, we pretty much put together a financial plan, complimentary, of course, to get people on the right, what we call roadmap to retirement. What are some ways we can improve upon their current financial situation. And if we just make one or two tweaks, can have a significant impact on people. But people need to call now to learn more.
All right. Mike, thank you for walking us through all of this. Good stuff. And for you to get more information, all you have to do is call the Pension Group. The number is on the screen, 614-414-3568. Mike, thank you much.
Thank you.